What's going on? Welcome back, everybody. It's good to see you. Good to be back. It's a ugly market out there, but that's all right. I didn't do the best today. Should have done good, but you had JOLTS come out. You had PMI come out. A couple things. But what's going on, Mike? How's it going?
Good, good. Shitty day for me.
Yeah. I mean,
Negative. Will Robinson. I have lost money today. So, I mean, I knew it was going to be a tough market. Just coming in, I wanted to give it, I had some good pre-market trades I actually was setting up, but just the market just didn't work for me today. So,
yeah, it's a tough one. I said on my stream this morning, I was like, guys, it's going to be a really tough day of trading today. And it was. And it is what it is. I mean, manage my losses today, and we'll move on to Fed tomorrow. But
yeah, I mean, we got the Fed. We got non-farm payrolls, and we had some. Yesterday we talked about we had some unemployment. I mean, not unemployment. We had some economic reports, and wasn't worried about yesterday's economic reports, but. Today's we had some, A-level reports, mainly ISM and the JOLTS, and they couldn't have gone any worse.
yeah, worse for the market, that is.
Yeah, I mean, JOLTS. What was the numbers, Ty? I mean,
Yeah.
I know there was we had more job openings than expected.
Yeah, so previous was 10.28 million, forecasting a drop of 9.75 million. Came in at a staggering 10.72 million, and I think that's the third biggest jump in history, I think. But I don't know. Regardless, it came in with job openings galore today. So
yeah, it came in with job openings galore. It also came with revisions to prior months. So we had a better, a JOLTS report that helped us last month, but they kind of revised that one back out. So.
Yeah, surprise, right?
Yeah, and then we had ISM, which is one of the better economic reports that the Fed's going to watch for health of the economy. And they're going to pay a little bit more attention to this too as well, because of the fact that with the yield curve inversions, which we'll get to in a minute. But ISM came in worse than expected, right, Ty?
Yeah. Well, so ISM previous was 50,
actually better than expected, I should say.
It was so it came in
worse for us.
Worse for us. So
for us traders.
Previous was 50.9, forecasting 50 on the dot. Came in at 50.2. But I mean, I'm looking at the chart here, and ever since the beginning of the year, we've just been steady declining on that, and so we're seeing that you're not really getting that that expansion. Growth, although it did go in up by 0.2 of expected, you're still seeing that steady decline. So,
yeah, I mean, look, they're still bad, but they were better than what was expected. I mean, we're pretty much the way you look at that, 50 is below 50, we're in contraction. Above 50, we're in expansion, and we're kind of right there at 50. Now, there was some good news though in the middle of that. If you looked at the prices paid component of ISM, that actually went sharply lower, and that's important. So if you look at the prices paid, only 5 sectors had increasing prices. And giving an example, in September, they had 10 sectors with increasing prices. And then I believe in June, they had 17 sectors with increasing prices. So on the inflation front, and, the reason we kind of look at that is because it's a good leading indicator. It's typically, in the past, a good correlation related back to CPI with where we are, with recession and all that. So, I think once that hit, the market kind of went up, went down, it was a little bit, but once JOLTS hit, that kind of overrode everything.
Yeah. No, agreed. And I think that's why it was so tricky today. But, yeah, I mean, why don't you pull up the charts and show us what you're looking at today with the market and the JOLTS and everything? Because, I mean, as far as I'm concerned, I'm pretty sure that's all the economic numbers that came out today.
Yes. Hold hold on one sec here, though. Before
Take your time pulling your stuff up.
Before I pull up the charts.
Oh, God. What do you got for us?
Hold on. I want to...
Is it like a meta explosion or something? I got to...
No, but hold on. I'm trying to get... There we go. I want to share with some people here as far as... let me see.
Viewer discretion. Close your eyes.
Viewer discretion. Here's Tyler at the zombie bike ride.
That's right. Key West.
Zombie bike ride, looking like a zombie himself.
That's my wife, by the way, as well.
Yes, and give you an example of the whole crew. You can kind of see here. It looks like I'm kind of wearing a hat there, doesn't it?
Yeah, it does. That's funny.
So there's my daughter. That's my wife.
My twin's the one on the right in med school.
Yes, Tori, right here. That's Tyler's twin. So we all had a good time down at the zombie bike ride. That's what we were doing instead of trading for profits and stuff like that. So I was waiting for these pictures to kind of sink in here so I can kind of show you guys a little bit about. And this thing was crazy. If you want to you can kind of see. And there's our one of our business partners, Bob Cardis, down in Key West.
That's great.
And you can kind of see it's just you just had just incredible. You had about 10,000 zombies. They shut the whole island down at Key West, and you can kind of see what was going on there. So
good time Fantasy Fest.
Yeah, good time Fantasy Fest. Good time had by all. So I was glad those finally kind of popped up. But yeah, let's look at the markets because no, Nick's locked in. Nick is like we said, he's locked in his cage. Somebody's got to make money while we're gone.
Yeah, come on. Yeah, not until the market is done its bearish descent.
And he had to get prepared for JOLTS because JOLTS.
That's his favorite.
That's his thing. So anyhow, the SPY. Look at the weekly chart. Interesting. This week we're day 2 into it. Obviously, this bar is yet to even be. It's not even. It's just pretty much a baby here. Yeah, it's a Simon. This is a G-rated show. Couldn't show you the body paint, the nighttime pictures, but
I was gonna say, I was like, hang on, guys, we're gonna get flagged here for what he's about to pull up.
Exactly. So, the SPY on the daily chart, nice little, nice reversal candle in here. We're at the bottom of this target zone that we kind of talked about. It just, again, economic reports be damned, kind of set the tone for us from our gap up. If you look at the 4-hour chart, Ty, you seen anything different from what we looked at yesterday?
Pretty much the same thing as yesterday, right? Higher highs, higher lows. So until we break that structure, I'm going to play it the same way.
Yeah, I agree. What's of note here, though, by the way, going back to that 4-hour, I mean, what a big 4-hour bar that we just kind of came out of.
Yeah, that's interesting because it's almost one of those patterns to look at where you have and it's a little bit of divergence on here with the RSI, to where you have this equal highs, almost a double top here as we broke through structure, but we're still in a bearish structure. So sometimes look for that as a signal to, okay, maybe we're going to start rolling over. So definitely going to keep an eye on that because that's a good point.
Yeah, I mean, of course, we did have that nice little bearish candle right here, right? Kind of.
Yeah, but it wasn't quite as much of a double top there.
You're exactly right.
Today, so it's similar, but it's a little,
Well, the other thing what I find interesting is I was talking about this yesterday. On the 15-hour chart, you can see here, we have this little cup here, right? And this was really the level that we were kind of butting our heads against. We had run into it here. In the beginning of the week, kind of, we fell back down, off of this support, run into it, and kind of came almost, a little bit more than 50% through here. And then, we kind of gapped above here, and they couldn't hold us up there. So I find that interesting. It's an interesting area that we could not hold on the market. So something to watch going forward.
Yeah, definitely.
If you look here at the intraday chart on the SPY, just, we're below VWAP. I mean, pretty much just flagging it all the way down. We had a nice little bear flag sitting right here, sold us off, little mini flag here. sold us off, and it's just you had a nice little flag in here, and now we have based in here a little bit at this daily low, and we're kind of using Friday's levels as a guide, but we're still declining VWAP, still below VWAP, so nothing really to see here on the upside. ES, same thing. We were talking about this 50% retracement level on the Friday's RTH session, and how this really marked a low for yesterday. Well, we kind of, found a couple nice trades in here off of this, and then of course we broke down through, found some at support 38.55, and then tried to break above. So I need us to stay above this 38.73 level for me to really have a bullish tint, maybe that we can get something going in the afternoon.
Yeah, agreed.
If you look at tech still, if you look at tech still below the 50 moving average, just, below, really kind of holding in here at the 9 and 21, kind of trying to hold in here as support, lagging from the other indices. So still nothing really to see there. You got IWM. I still think we have a date with this declining 200. But what's interesting about this, we're kind of button up in against this little trend line here, working on a little bit of a candle. We'll see how that kind of plays out today, but it's been the three horsemen to watch. This is what we've talked about for pretty much all summer, for 2 to 3 months.
Thought we were going to pull the Dow up. I was excited to talk about the Dow for a second.
Oh, you know what? I had one day that I pulled the Dow up, and it's just such a... All right, I'll pull
You got me excited because I was like, that's what I trade. I trade the Dow.
Yeah, I mean, who the hell trades the Dow, for crying out loud? I mean, so, yeah, look at this. Still holding in the 200 moving average. F the Dow. But go ahead, Ty.
No, I was going to say, it's interesting because the way I track it is, so I have the same... bottom trend line you have down here as well, but we're sitting in this channel here that we're now coming up into with the 200 and the upper end of this channel here, and with that, the IWM, like you like to track, is now at that interesting 200 and backside that trend line. So seems like indices could be taking a little bit of a hint to, hey, we're either going to grab liquidity and then run back down to the lows again, or so it's kind of interesting to where they're all at right now, because I was watching the Dow today and the IWM, like you said, and they're kind of coming to interesting areas.
Yeah, and that's a good point. And what's interesting, if we go to the monthly chart on the Dow here, look at this big bar.
Shit, I forgot the monthly close, dude. I totally forgot.
Yeah, so look at this nice big bar here, nice thick. Not many tails in that bar.
That's spiffy.
It's little stubs. Matter of fact, I think the best October since 1900.
It looks like it. Oh, wow, that's impressive.
Yeah.
Wow.
So, we talked about yesterday from a seasonality standpoint, a lot of bear markets. The majority of the bear markets have bottomed in October. We talked about it from a midterm perspective, which we're in. That, go to the voting polls next Tuesday, right? So, typically in a midterm, there's every midterm election we've had, Ty, there's been 19 of them since World War II. Mm-hmm. Every single one, the following year has been a positive year for the market.
Really? Wow. Okay.
So there's not been one that hasn't been positive. So
okay.
And again, the best month of the year that the midterms in has typically been October. So
well, there you go.
Pretty much following to suit. The second best month in a midterm year, November.
Interesting. So then my theory is, hey, look, maybe then with this channel we're breaking into the upside. Come on. Let's go.
Could be. I don't believe it.
I know, right? But we'll see.
We could be. So, I mean, look, Dow obviously doing well. Matter of fact, an interesting thing is 10, and this is crazy, right? Because supposedly we're in a bear market. 10 of the 30 Dow stocks are now up year to date.
Huh.
10 of them. So, give you an example, and we pulled this up yesterday. Caterpillar, where is Caterpillar? So you can see kind of where Caterpillar was at the beginning of the year. Caterpillar was down on September 27th, 21.4%. It's now up 7.1%. Still up it's now up 1.1% year to date. Just crazy. So Chevron, which is in the Dow, let me pull that up. That's also up. That's up like 58% from where it was at the beginning of the year. United Healthcare, another one of those 10 stocks in the Dow that is up for the year, about 11%. You have McDonald's. And another stock, believe it or not, that's been leading here is IBM. So IBM doing its thing, and we had looked at this nice little monthly trend line that me and Nick had always been kind of trading, and it kind of failed me several times. So I don't follow it anymore, but kind of sitting above it in here after this sideways consolidation. So nice big bar on IBM leading us up with a nice little short squeeze. Nice. So yeah, 10 of the 30 Dow stocks are up year to date. So what bear market are you all talking about?
Yeah, exactly.
Bear market. I don't know the bear market. Anyhow, looking at the three horsemen, I mean, the story today pretty much is, after the economic reports came in, you got a nice little pop back out. And we talked about, being in this active sequence, rates, the 10-year up now back above 4%, up about back above 4.05%. So it's definitely something of note. The other thing with the rates, though, is really the yield curve. We talked about the 3 and the 3-month and the 10-year inverting. Well, today we had the 3-month and 30-year invert. So you got the 4.16% on the 3-month, and the 30-year sitting at 4.12. So, yield curve inversions all along the curve. And of course, that's what a lot of people are looking at as far as a reason for a Fed pivot. And, will they be right? I don't think there's a snowball chance in hell that they're going to be right. But, again, you got to always be open up. But, going through the rest of the three horsemen, we got rates up today. Not good, obviously. You have the dollar up today off its lows. Not good, which I'm sure you're going to get into. And then, of course, VIX here. VIX kind of holding, just hanging out at lows. But we kind of talked about the VIX dropping, maybe falling down towards 24 going into the Fed meeting. So not a surprise here with what's going on with the VIX. Bitcoin, finishing out this M pattern, Ty. I mean, yeah. Nice little M pattern. I mean, God, where, Now, on the flip side, Dogecoin, though, doing its thing, right? And I know you're going for Theo. You're going to give us an update on Dogecoin, so I can't wait to see that. But and I won't, break into that. But again, ES, kind of falling off this 3875 level again. So right now, sideways action, declining VWAP, nothing to see here. And I think it's just been an odd day. It's been an odd day. Tough trading environment. So I know you didn't have a good day trading either. So I'm curious though about what you saw in the dollar and in oil. I mean, we see a lot of headlines kind of crossing around Iran, headlines on Iran, stuff like that. I can't make sense of any.
Yeah, no, it was definitely tough because when I started out this morning, I said, look, I mean, it's gonna be a tough one today, and what I was mainly trading was gold and pound yen. And so I guess I'll start with gold because I mean that was where I was at today. It was a pretty easy idea. Execution wasn't the best. It's tough, right? Because when you come into the market and you see that, okay, we're up. I mean, we're moving and grooving overnight, dude. Like we opened up overnight right here and we're already up here in the market. Like, I mean, that's honestly just that in itself. It's super tough to put together an idea because like do you want to short it because it's so fucking strong, or how do you hop in on the long? So it was just tough to begin with. But if you look at the bigger picture, and although yes, today was extremely strong, looking at the bigger picture here on the 4 hour, You got to know that this area, this zone I have in here, the 1652 to 1660, a major area of rejection. If you hop down to like the 1 hour, the 4 hour, this is just an area where you have just a lot of contention, a lot of pivots, a lot of wicks, and it leaves that area. And so as we were pushing into this zone here, and we were notably pushing into this recent wick rejection in here, this was my idea. I was like, all right, look, we're going to look for shorts into this area here. Let me hop down a lower time frame on the 15-minute. And so as we were entering the zone, I was like, all right, so I mean, it's not an ideal play the way I traded it because it's very risky. Right. But I took a starter short position, a half position, just as we were pushing into the zone, looking for that rejection. Now, yes, I'm looking for a top, not a good trading idea, but I've done it many times, so I know how to position myself in it. And so I took a starter entry as we were approaching this area here, and then I said if we get another retest of that zone, I'll add again. And so after we started consolidating, the 30-minute closed bullish. The 1 hour was then producing this big rejection wick. I added on another retest of this wick here, and so I was in double position, and I was really looking for it to reject this big wick area, which is what it did, right? It was a tough trader, but after we had that nice rejection, that nice bearish engulfing here, I had to go, and it's just the nature of the game. I had to go to the dentist, and I harp this all the time. Just set and forget. Don't manage your trades. I
hope Simon's in here and he hears this next part of the story because Simon had this exact thing happen yesterday.
Damn it, Simon. Yeah.
No, but he learned from it.
Yeah, well, yeah, it's always a learning experience because I never do it, and I was going to the dentist like shit. Well, dude, this was a risky trade as it is. I was taking two short positions stacked on a long day. So I set my stop to break even. It didn't even have that much room between it. Like price was right here. My entry was right here. It was really just dumb to begin with. And it wicked me out break even here. And then it dumped just beyond so my original take profit was somewhere, it was around VWAP. So I believe it was 1644, somewhere in this area. It was around a 3-to-1. And it would have been around a 100 pip move. Would have made at least 10,000, probably 12,000 on this move here. Yeah, so it stopped me at break even, and it dumps. So it's what I get. It was a great trade idea, what I was looking for, but you live and learn, right? Dentist owes me 12 grand. So
yeah, exactly. Yeah, I mean, look, and this is kind of what we talked about in our trade review session yesterday, and that's how we were going over through Simon's trades as we go through all our traders' trades, and moving stops is one of the hardest things, right?
Yep.
Because I always say if you're going to move a stop, it's got to be because there's new information for the trade structure. Not based off of money, right? And a lot of times when the trade goes into profit, though, we all like to move our stops so that, hey, we don't have a trade that we're up 3,000, all of a sudden we lose 1,000 on it, right? I get that, and a lot of times that's a good thing to do, but a lot of times when you move stops, you want to make sure that it's a break of structure and
yeah, no, and I literally preach that. I agree, and it's like you wait for it. You got to let the market breathe, and the market fluctuates. It breathes. It doesn't go straight to your take profit. I'm like, well, and I say that all the time.
Especially this market.
Oh yeah, and especially gold. And so like you said, you got to have your stop and trail it based off of a break of structure, and there was no break of structure at all where I played. I mean, so it's just like you said. I mean, it's
but
good.
You bring up a really good point, and it's a point that I brought up to the group yesterday. Is look, even us traders have been doing this, pretty consistently for a while. We all are going to make mistakes like this.
Oh yeah.
I mean, it's just part of being human, and that's why trading's so hard. So key is you got to learn from it. You can't break. You can't beat yourself up over it because it happens to everyone.
Yeah, and born alum. So the way I trade, as I'm sure everybody knows, the key to winning is letting your winners run and cutting your losers smaller. And so the R multiple and I mean, if you want to move your stop to break even when 60% of your move, it depends on where they're at. I'm not like for this example here. I'm not going to just put my stop loss to break even though like, hey, like, this thing's dumping, because you're going to get that, retracement and fluctuation and breathing. Like, I'm not looking for I have this area take profit for a reason. It's not just arbitrary. It's based off of levels and what I've seen the market do. So I'm not just going to move it to break even just because I'm letting my trade play out the way I expect it to play out, and if it is what it is, and then I'll learn from it, and then maybe some more data will come, and I'll be like, okay, maybe I should have done this. But I don't. That's not how I trade. At least I don't like.
And you can't change. You can't look. I always tell people you're trading with the odds, right? Mm-hmm. So a news event / rug pull is a small percentage of the time event. So you don't change your trading style based upon something that may happen every so often, right?
Yeah, right.
And so, you just can't do that, because then you're affecting the majority, like you said, your R multiples and stuff. So, you got to be diligent for something like that to happen. But if you set your stop loss, where your 2-to-1, 3-to-1, 4-to-1, whatever it is, stop loss is set, and you get rug pulled, you get stopped out where you expected to take the loss. The problem is traders we're so wired as human beings to not want to take a loss. Okay, you can't do that. Simon's doing a great exercise now. It's funny. Well, it's not funny, but Simon did a great exercise. He basically said, all right, I'm not moving my stop at all. I'm going to allow my trades either go to my take profit or go to my stop.
Good man.
Okay. But yesterday, so you have 5 trades yesterday. I'm sorry, Simon, I'm not laughing. Okay, but he had 5 trades yesterday, and the one time he moved his stop tie was a trade that would have went 6R.
The way it works.
So all 4 other trades, he didn't move his stop and got fully stopped out. And then the one trade that he did move his stop, it was the one that would have paid for all the other trades and then some. And that's the way trading works. So you're not smart enough to figure, you can't beat the algos.
Yeah, exactly. It takes emotions out of the market, and you got to be as mechanical as possible. And being mechanical is just, not anticipating a random knee-jerk news event. It's just playing out your position. So
yeah, and I laugh because it's exactly what happens. I mean, it happens to me all the time. If 100%. I start effing with my trades, I always F with the profitable ones.
100% of the vice. Of the time that I fuck with my trades is the winning trade. Always happens that way. Always. It's emotions. So.
And Simon said it right. The beautiful thing is, guess what? There's always another trade coming right down the corner.
Oh, yeah. Oh,
man,
dude.
This trading is definitely a journey, and it's fun to me. And you just can't get caught up in, guys, you got to take losses.
Yeah.
If you show me anybody says that they don't have any losses, well, F them. They're not a real trader. Real traders take losses.
Yeah. Yeah, exactly. But that's that. Overall, though, looking at gold here, from where we're at, and I'm going to kind of move this along here, delete that, so we're kind of, again, we're pinned in this area here, ahead of FOMC. So it's going to get interesting, because I've been trying to watch the dollar, I've been trying to watch where we're going, and it's tough. Right now. And so right now, where I'm watching is this gray zone. 1660, 1653 is the main area you're going to want to watch as control. Is, if the bulls can get it above 1660, then I think they have control and we start getting a rally out of here. But it's going to be a tough one because we're pinned in here and we're so weak right now. And if you get that dollar continuation, now this morning was tough in the dollar because I was looking at it this morning and we were pulling back pretty decently. And I talked about it. I was like, look, this is probably going to be where we get that balance in the dollar, which is why I took my gold short. Because if you looked at the dollar this morning, let's find 7 a.m., which is when I was on the live stream. It was right here, and I figured we want to top here because this is an area where you got to find where the big volume is played, right? You have the big volume here, and this is where the consolidation was. And so bringing that over, that's where we were sitting this morning. And I figured we already had our retest of this trend line here, of this longer term trend line. And we were also sitting at volume where we pivoted right here, back with this volume here. So it's a very strong area we're approaching. And I said, if we give up 110.65, then bears are in control, and it's going to be dangerous because we're going to start pushing lower. And so that was my whole thesis behind taking the gold play as well. And we got that bounce. We got a little bit of help out of the JOLTS and news, but it works the way it works. And so looking at the dollar, if we can get momentum through this 111.80, then I think we see a continuation here through these highs, at least to 113, to continue this this bull flag here. And maybe, just maybe, if it's ripe enough, we'll get that breakout with the Fed and stuff. I don't know. We'll see what happens. But regardless, right now I'm going to trade the way the market's flowing, and market's flowing in this bullish channel here. So I'm going to trade it back up towards 113. And until we get that break, then we'll reanalyze. Right. 110.76 is the 9.7 peak. Bounced very clearly off it this morning. 9.7 peak, right? Okay, yeah, perfect. Yeah, good. Exactly my point is it's a big pivot point in here. So, yeah, good point. Looking at oil here. Oh man, oil. It was I'm so frustrated because oil was one of my main traders, I guess, 2 weeks ago, and I've kind of gravitated more towards gold and pound yen, and I've been just distracted and haven't been looking at oil lately, and it's been so easy to trade. I've been calling out these plays on the show every morning, and they've been working out beautifully now. I haven't been taking them, so I can't, it is what it is, but I got to get back to trading my oil, my baby, because man, it's been nice. So I talked about this 86 level. 86 is where the bulls have to hold it if they're going to maintain their bullish stance in here. And they did. Last night they held 86. Nice bounce off of it. I talked about this morning about 87.20. 87.20 was an area that I would consider taking longs off of. It's an area we had a lot of wicks, a lot of rejection, a lot of dip buying here before. And if you look at it this morning, I pointed out this nice triangle, this nice bullish flag here, and we had this beautiful breakout from here. And if you could have just drawn your Fibonacci's for this morning from peak to trough here, and you could have grabbed a nice play here to at least the negative 27% retracement here, and it would have grabbed you some nice profits. So I'm going to get back to trading oil because it's just been so clean, so predictable. But looking at the overall trend here in the overall market, we're maintaining these higher lows, which is good. We're maintaining this 86 bullish stance, which is good. Potential bullish engulfing today. And so it looks like it's going to start reaching for 95 again and start getting this continuation. OPEC's doing the best it can. Saudi's doing the best it can to prop the market up. Talking about, hey, there's imminent Iranian attack on us. And so they're trying to there's going to take stuff off, it's going to take supply off the market and stuff. So they're doing the best they can to prop this market up against the U.S. and everyone else. So we'll see what happens. But right now, bullish structure is in play, and until we break like 86, this low right in here, then I'm going to keep playing these buys up towards 95. Could be a bit of an inverted head and shoulders on oil 1 hour. Born Alam says. Let's see here. Okay. So what?
Yes.
Head and shoulder, is this we were looking at right here?
A little inverse head and shoulders there.
So yeah,
we knew the head and shoulders guru would come through.
Yeah. Were you looking at? Yeah. I mean, cool. So yeah, let's see if it holds. Could be a nice rally out of there. Could be an interesting area to buy here. So it's interesting because the way that markets have been trading lately is the gold and oil haven't really been trading with the dollar's directional bias. Like, for example, dollar ended up soaring today off that news, and oil was really strong today and stayed strong. So sometimes you get a little bit dislocation recently, but that's all right. That's why I'm not playing too much of the relationship trade right now as far as that goes. And yeah, I mean, crypto, like you said, Bitcoin just kind of sitting there. Yeah.
Doge.
Oh,
Doge.
Yeah, dude, Doge.
Doggy coin.
Fucking beast, dude. It's up 158%, or it was up from the peak 158% in like a week. So that's not bad at all. You're getting some sympathy bounce in our baby Shiba here. A little bit of a sympathy bounce there. That one's up like, it was up around 50%. So, and a couple of other bounces across the board. But Doge was getting a nice rocket here. But running into this area right here, excuse me, is going to be, I'd be shocked if it breaks through, because this is an area where we've tried having strength before and it gets knocked right back down. So this is going to be a tough cookie to break through. But yeah, like Bornlam said, unless he makes like Doge, you get a blue check mark, or you kind of make Doge an actual payment or something, it's going to fall back down. But it was a fun ride. I wouldn't be buying the dips on this, but you can pay for the blue check mark and Doge. Exactly my point. So, but yeah, that's it. I'll give it back to you, Mike, and show us what you're looking at.
Awesome. Yeah, Elon. Speaking of Elon, it just hit the tape that Twitter Blue will now cost you, or it's going to cost you $8 a month. So
Twitter Blue, is that the blue check?
That's the blue check mark.
$8.
$8, man.
But do you not even have to have like a prerequisite for that? Like you have to have like 100,000 followers. Like you can with 10 followers you can get it.
I don't know.
Yeah.
Your guess is as good as mine. But I mean, look, we kind of had, before we hit the show here, you had some news kind of hit that the I think it was Department of Justice or FCC actually came out, and they're looking to possibly ban TikTok. So
that's right.
Twitter used to have something called Vine, right? And
do it for the Vine.
Very, very popular. And so he's talking about bringing that back. Also, it was interesting. I didn't realize, but who's the devil-looking dude that started Twitter? Jack Dorsey. Yeah. So he actually rolled up his $1 billion worth of investment that he had left with Twitter into the deal. So I'm looking maybe sometime in 2023 to see Twitter IPO again, and I think that's going to be a fun thing. So Elon's on a mission, and the cost of really financing this deal is kind of expensive now, and we talked about that yesterday. So I think Elon's going to have to, he's going to have to get on the horn, and he can't just let this Twitter deal just sit here. He's going to be making some moves, and it looks like he's moving fast. Yeah. So you can kind of see that. Anyhow, getting back to the markets. I mean, markets failed again from this area. I mean, it's like, you had put that meme into the Discord the other day, rinse, soap, and repeat, right?
Yep.
It's kind of like, come on, man. This is not that, it's just sideways choppy action in here. And, expecting kind of this, action. I think now we're getting closer. I mean, the Fed started their meeting officially. Fed's in it. Tomorrow we'll be, obviously previewing the Fed, on the 1:00 show. We'll be holding up. We'll trade through the press conference. We'll do some trades. So JT, you guys, if you're here, it'd be great, because we always have fun trading through the Fed news event. So we'll be on for tomorrow. We'll be doing that, and we'll have a pretty good show ready for you and get you prepared for what to expect. Expecting some fireworks. I think the market's poised, man. I mean, a lot of people are saying, especially with where this Fed event kind of fits in the first week of the month. So you got some competing forces. You have, a lot of CTAs looking to put money in the market. A lot of institutions looking to put money in the market.
And so I think it's going to be interesting, the reaction. I think we're poised. So anyhow, going through stocks, I'm in a trade now, actually, still. And I traded this stock. This is one of my profitable trades from yesterday. Getting in win. Got in win off of really the break of the opening print in here. And kind of, doing well. And, it's still, win, and the everybody has been doing really well. We've traded this from the investment opportunity we had it break over the 50 yesterday. I still think Win's got some room to run up into the 200. So it's going to be interesting to see whether we can get that. Still sitting in that trade. But the other trades, not many good trades that I had today. I was just a little bit too aggressive. Netflix was one of those trades that, I really thought we were going to get some oomph. And I thought, my problem with Netflix, okay, and I did take some off into some profits, but I thought that Netflix, my target was 300, and it's one of those, I always say, don't be a dick for a tick. Well, Mike was a dick for a tick here.
Oh, yeah, baby.
I mean, I got in early on Netflix, and I had 300 in my sights, and you can see just shy of 300. I did take some off up into this, but the problem is I stayed in with a good portion, and then I got back in, and then I doubled down. I actually, got back, added some in at 296, and I was doing pretty good here. I was up in the position, and then, when you see a stock that just can't get going, typically, especially in the early morning hours, if a stock's not going and the market's going against you, just get out. So I got pretty lucky. I got out before all this drop and pop. So just a small little loss on the second part of the position. I kind of, consider this almost a break-even trade. Had some decent profits up into here, and just couldn't trade around the position, couldn't make it work. Another stock that I think if the market was a little bit better, I think we would have had a better play, is Airbnb. Airbnb, just, one of those stocks that we like to play when the reopening plays, the travel plays are doing good. Airbnb is the one that I kind of play into. And, you had some good run up in here in Airbnb. Again, this is one that, my second trade into it just didn't quite work out. And I was looking at a 111. I thought for sure maybe we were going to bounce right back out of it. I thought it had some good momentum. It was a nice run up into the market, but just was not to be. And that's why we get out of stocks quick. You get out of your stocks quick when they don't work against you. Now, one that worked really well for me was Sophie. Sophie, I called this one out in our Discord. I bought this bounce off 6, Ty. I mean, if you go to the daily chart, Sophie, at 6 is a pretty big winner chicken dinner. I've bought in Sophie many times off the 6 level. Got it here off this level, played it, got out like 627, something like that, once it got up over view up and came back in. So nice trade in Sophie. It was a nice win, and really kind of liking that trade. I wish I kind of would just stuck with the trades that worked, right?
Yep.
Go was going in the morning.
Okay, was going.
Yeah, I mean, got an upgrade. Go. Again, it just it's kind of hanging in there, but I really don't know. I love when these stocks. I like this chart, Ty. And when I saw the upgrade and I saw where it was gapping above. I mean, look at this level it's gapping above. Okay, it's gapping above the 100. It's gapping above at a pretty nice level. So I'm still holding some of this, but I thought I was going to do a little bit more today.
Yeah, that's going to be interesting because that's a beautiful gap and go. And then now you're going to be running into this previous area right here. So maybe we fill that gap and bounce. I don't know, but it's going to be interesting to see where we go from here.
Yeah, I mean, you got the 200 sitting overhead at 1606. You got that trend line, kind of the button up against that trend line. So I wanted a little bit more. I thought we'd get it.
But again, when you got stocks to the upside, it's going to be hard to play stocks to the long side when you got the market kind of filtering around.
Right.
And so go. But what's interesting about the market, and I want to kind of pull this up, my market internals platform. And if you look here, it's really been an odd day for me. And this is what really, I had some losses on the ES. And with the flags that I showed you, I probably shouldn't have. But this is where the relationship trade, this is where the market internals really was going against me today. Because the whole day really, NYME was pretty positive. You had 3-to-1 upside volume, 2-to-1 upside volume. Look at the percentage of upside volume, above the zero line. It just really, if you looked at these three screens here, just these three blocks, what kind of day would you say we're at? Oh, pretty good day, right? You got breadth, decidedly positive. You got the tick cumulative positive. You got the VIX at lows. You think, okay, well, we're rallying pretty good. But just, not to be just lackluster market. And so, that, down here, you can see the dollar, pretty much rising through the day at highs. You got rates rising and at highs, really kind of overtaking. But the breadth of the market today, surprisingly, is not as weak as you would expect with the market action we got. And I think that's something to kind of, it's something to kind of note going forward. So we'll see, if there's any kind of surprise in the Fed tomorrow, then I think we could, the market's poised. People are trying to get into this market. If you can explain to me, and maybe Bornelon can, or somebody can, why Uber is surging today when they basically shit the bed on earnings is beyond me. Uber just, again, another one of these gap above the 200 kind of run. But what was great about Uber, you can kind of see here in the daily chart, it came in and found support right at the 200. Look at this tie. So I tell you traders all the time, we have our 4:30 meetings, and I don't know if New York Chris is in here, but if he is, drop a line. This is an A+ setup. Okay, a stock that's gapping up. It gapped above the 200, came back in, and look at this, Ty. Liquidity grab, pierce the 200, go right up in the VWAP. This is A+ setup, guys. This is like a guaranteed point if you take this trade.
Yep.
This is my setup where we say taking candy from a baby. Okay, this is the baby here, and you should have picked its pockets, and you should have took all the candy it got at Halloween yesterday, because this was an easy trade. So Uber, again, you got market internals kind of, deviating a little bit. You got Uber shitting the bed to me in earnings. I know they had a better than expected projections and stuff like that, but still, they really, they lost a lot more money than was projected. And I just definitely didn't expect something like that. A couple other stocks that got some upgrades. You have Monster Beverage. We've traded this a lot. Couldn't get going, but I do like this chart, Ty. I do like this chart. Tell me your feelings, because we've traded Monster very positively going forward. And if we can get positive, see, what you got to do, guys, is you got to have a portfolio ready for, if the market surprises to the upside tomorrow, you got to have stocks that you want to get into. And Mark, this is related to you. If the Fed is dovish and surprises, little hint, you don't want to jump into a chart like Meta. Okay, you want to have charts of stocks that, I think kind of like this stock that, it got an upgrade, and it's a decent looking holding up chart. You got all the moving averages almost stacked perfectly. You can definitely get a rise in this stock.
Yeah, I like where we're at, because rolling Jones. So I like where we're at, because we had this nice channel that we were actually this consolidation we were sitting in. And so the way I like to play this is if we don't hold this area, definitely watch the 50% area of this consolidation, because that's where we might bounce off of and run. So whether we're holding the top of it and we continue, or we break down and hit the 50 and continue, either way, it's looking bullish for a continuation. So I'd be looking for that. I like that chart.
Yeah, I do too. And we traded Monster pretty well through there, but the same thing is like, so you got Monster, but Meta, I know Meta, look, Meta's getting a little bit of a bounce in here right now. And Celsius, and I'm going to get to that one. This is all based off of the TikTok news, which to me, news events, what happens, Ty?
Yeah, get back to the scene of the crime.
They go back to the scene of the crime. So I'm looking for Meta to go back down to 94.50.
Yeah.
And you got Snap, same thing. I mean, look, I don't think anybody really thinks they're going to ban TikTok, but if they are, maybe that does keep this pop and this going.
They tried doing that with Trump.
Yeah, I mean, they tried doing that, and now I guess it's a good thing. But yeah, Celsius is the one that we've traded really well. Waiting for traders to come back in volume-wise. But this is another one that's kind of, what's interesting to me on this one is you have the 50 moving average right here, right? And you got this little shelf that it had kind of gapped up. It looked like a little head and shoulders pattern almost looking here, right?
Yeah,
and then,
exactly.
Came back down, into here, and but what I noticed on this chart is the wicks above this little shelf here. And then, of course, you get the wick to extend yourself above the 50, and then they pull it back in.
Yeah, exactly. Because two things I was watching is you mentioned that head and shoulders, and the most important thing for me for the head and shoulders is the neckline, and that's where your shelf is, that neckline. And you talk about this wicks, and it's showing you that the sellers are knocking it right back down after they try to bring it through. So until it can close above this shelf here, I think it's going to just continue on down for now.
Yeah, I agree. So definitely not a good sign as far as that's concerned. That's why I kind of Monster looked like it might be a little bit better set up. But I like these. But the other thing is, Mal, if the Fed's going to SPHB, sure. I mean, you got your your equally weighted funds coming in here and some stuff that you can get into, but. I mean, you can really make some money in some good stock charts that are set up that find some really good support, really good coil. One stock that's doing well today, I don't know if you saw this, Scorpion Tankers. I kind of missed this one setting up. It was a nice little, we love this little trend line break and doing its thing. Scorpion just keeps on going. They're up almost 7%. You also have banks doing well today. Yield curve inversions are supposed to be not good for banks. Hi. Okay. So, my whole thesis right in here that, why are the banks doing so bad? Well, because the yield curve is inverted, stupid. Well, Mike, the yield curve's inverted even worse here, and the banks are going up. Well, I have no answer for you. So, banks should not be this strong, but it's definitely something to note. I mean, Goldman Sachs looking strong, J.P. Morgan looking strong, both above the 200. So you got the XLF doing its thing. So, that's something to note for me. Definitely the fact that the banks are. Kind of, strong in signaling here is something that I don't even know what to say. It's just kind of tough there. So we'll have to see what happens in here. I'm really upset. I wanted yesterday to short this MOS. Remember last time we had the bullshit news in the pot stocks, Ty?
Yep. Well,
this thing went up over 12, and then we shorted it and took it back down to 9. Well, they're at it again with some kind of bullshit news. They're back up into the 100. I thought we might get another day's momentum, and then we'd be able to short into it. I was wrong. So you're getting the drop now. So I guess I missed that trade. I missed the easy trade. Tilray, same thing. So stay away from these junk-ass stocks that don't really mean anything. But, yeah, I mean... the big thing for me is, Mal keeps on bringing up, he loves,
one thing Mal loves from a fundamental standpoint is this the cruise lines. Okay, Mal loves the cruise lines. And RCL, I mean CCL, I mean, how can you not go wrong? Cruise lines are kind of running. I mean, right, Ty?
Yeah.
So, yeah, I mean, and this kind of comes to the whole fundamental issue of the whole freaking market. It's like there's no reason for us to be bouncing these markets right now. There's just no reason. The Fed's not going to pivot. Why is the market bouncing? But it goes to the fact, I mean, these cruise lines are nothing more than concrete containers that just is filled with debt. Okay. So I have no idea. I mean, you got the jets kind of doing their thing. You can see United Airlines. I mean, just above the 200. Don't ask me why. I mean, none of these freaking things are profitable to me. But they're all running. But see, you as a trader, that's where you kind of, it's, okay, what do you fundamentally see versus what you see in the price action? And so it's kind of a battle there, and you got to have that happy balance. And, it's why you can't short these things when the charts are looking good. And that's why really, I mean, I know that the airlines are all, still seeing travel. I mean, we talked about it yesterday. I mean, there is no recession, right? Because everybody's traveling. But the problem is that it's one thing seeing strong demand. It's another thing to be profitable. And they're still canceling a lot of flights left and right, and they're not as profitable as they should be, and they're not in a good financial debt position as far as a lot of these travel companies. So I don't know. To me, I have no personal interest in owning any of these things. I just think it's going to be tough. But anyhow, the other thing that looking at, sorry I went through that. Tonight after the bell, AMD, Ty.
Okay.
AMD. I'm not looking for anything special out of this. Yeah, and I saw Big Man was in here. I want to buy Amazon and Google too. Okay, but look where Amazon is. Okay, and my question is, if the Fed narrative, okay, we kind of highlighted this area here on Amazon. So this is kind of the area that I was kind of looking to buy Amazon, hopefully towards the bottom of this area. But Tyler, if the Fed is not going to pivot, where's Amazon going?
Yeah, Amazon's going down.
Okay, so if we somehow miraculously get some kind of crash, or they really come out hawkish and the market just really hits, and we get Amazon down below 80, I'm going to add to the portfolio. I'm not ready to add here, but I will be adding to our portfolio if we can get it down below
I think
80.
it's likely you see Amazon around 80, because looking at like structure here where we had broken this trend line here and we did this Fibonacci retracement, it's like we're the negative 27% is like sitting right around like 84. So I think you come into this area here. I mean, technically it's looking good for around 80, and then might get some good.
Yeah, I mean, I don't know, man. And again, Big Man, you may be right. I mean, maybe the Fed does pivot. Maybe the Fed is dovish, and then this was our buying opportunity of a lifetime, and Amazon's back up to all-time highs, like Caterpillar seems to want to do. But I don't know. I mean, but Amazon, Google, definitely some stocks that I'm kind of highlighting on my portfolio, but I still think you got some lower prices to come. And don't forget, we're starting to see that rotation, right? We talked about October. Okay, why is what kind of stocks are in the Dow? Okay, typically more value type stocks, right? And so we've seen this rotation, and there's a reason that tech has lagged. Okay, and we've seen small caps and kind of more so the Dow lead the way. It's because we've seen this rotation from tech to the value stocks, and it's not hard to see. Some people don't understand this. Okay, and this is what fundamental people forget to put into their value equation, right? Okay, interest rates, Tyler, forever has been where? I mean, for the last 20 years, interest rates pretty much have been around zero.
Right.
Right? Well, when you're looking to buy tech, okay, there is nothing to discount the earnings to. So you can pretty much give any valuation you want to a tech stock. Well, now with interest rates hovering around 3-4%, okay, you now have an interest rate to value future earnings against with your tech stocks. So, are you going to look at those valuations with interest rates now all of a sudden high, or are you going to start looking and maybe gravitate towards more some dividend type stocks, value type stock plays? And what we've seen from a lot of traders, a lot of professional traders that need to produce alpha for their investors, they've moved to the dividend type stocks, the value plays, more so because it's, they've considered, well, we need to be getting some kind of alpha out of this market. And really, if you look at it, and if you look at price to sales, okay, price to sales if you look at price to earnings, price to sales too, price to earnings now with where interest rates are, extremely high. You're talking about the S&P at 19.6% from a price to earnings standpoint. Well, if you're looking at traditionally where that should be in a value type market, you're talking about maybe 15 and a half, 16%. Well, you got price to earnings. So you kind of got to look, if earnings are coming down, then you also need that price to come down. And so you're probably looking at another 20% drop in equities just to get back down from a valuation standpoint. And this is a market, but see, that's a value market that a lot of people aren't used to analyzing in this market because, hey, just buy tech stocks, man. Interest rates are at zero. There's free money. The government's giving you free money, so off we go. So that's something to think about. And so in that type of market, what stocks are going to get hit more? What stocks have further to go? It's the tech big cap stocks that are going to take the brunt of that hit. And that's what we've seen. Now, nothing's to say that, the Fed won't capitulate, won't change course, or that we won't see a rotation back. But right now, I think Google, Amazon, I think they got further to go from a discount standpoint. And that's, kind of the thesis that I'm looking at going forward. But the problem is, are you ready, Ty, to buy a McDonald's with where McDonald's is?
Hell no.
I mean, look where McDonald's is. I ain't buying McDonald's now. I mean, you're going to buy Coca-Cola?
No.
I mean, look at these stocks. I mean, these value stocks now all of a sudden aren't value stocks anymore. So again, we're kind of back where we were prior to the summer, in the spring, when we were complaining about value stocks being tech stocks and yada, yada, yada. So anyhow, AMD, all those stocks, I think that it's got further to go. I really do. I like AMD again down here around 35. 30.
Yeah, agreed.
Love to get AMD in there. Love to get into that. So you also have DVN reporting after the bell, something to take a look at. But look where DVN is. I mean, I love this stock. We've traded this stock great. Look at ExxonMobil. I mean, these stocks, man, these energy stocks, it's crazy where we are. And look where oil is, Ty, and look where these stocks are. So where does the adjustment come in? I mean, these stocks, these energy stocks, somebody answer me this, okay? If you want to buy these energy stocks, look where oil is compared to where it was. So when oil back in March was at 130, okay? Oil was back in March at 130. ExxonMobil was at 85.90.
Yeah.
And now it's at 111. Okay. Look at Oxy. Okay. Oxy back in March was at 58. It's at 74. Chevron, for Christ's sake, excuse my language, back in March, a little bit better. I mean, Chevron did run up to 175 and now it's at 185. But again, to me, it's just, typically you look at relationship trading And it just seems like the oil stocks, energy stocks have outrun the underlying asset. But we, again, it goes back to forward-looking contract pricing and backward-looking contract pricing, and that's something that I guess we can talk about later, though. So Devon Energy, another one, I think Clorox has earnings after the bell, currently sitting above the 200. Another one that has earnings after the bell is McKesson. And these are, Clorox and McKesson, good, huge earnings, revenue from a revenue standpoint, should be a good barometer on market, and the health of the economy going forward. So, and as our resident fundamental, trader is, put in there, Mal, DVN, 6% dividend yield, McDonald's 2.23% with a PE on Devon 8. Now, obviously, energy stocks typically have a lower PE historically anyhow, than a McDonald's would. But still, you get the point. They do keep printing money. And if you look at, do you see the earnings from BP overseas? They just killed it, slayed it. So, energy stocks still doing well. So you got some stocks to watch after the close. I'm not really looking to put on a call spread or anything into AMD. I'm just going to let it do its thing. Not interested in playing that. And especially with a lot of these earnings plays, we got the Fed tomorrow. So you don't really want to put on big positions as far as that's concerned. So definitely something to keep an eye out. But again, tomorrow, okay, we are going to break down a little bit about the Fed. We'll be broadcasting through the Fed. We'll trade through the Fed. So we always have some fun with that. Anything else you want to add in here, Ty?
No, pretty much cover everything I was looking at.
Okay, awesome. That's all I got. It's this markets. Let's do one last check in on where we are with these. Oh, look, you got the
yeah, baby,
Christmas tree, baby. So, I don't know. ES looks like it's trying to wedge in here. What do you think?
Yeah, I was looking for a little bit more of a pop towards VWAP to short, because I was looking at the 30-minute time frame, and it's like, it's looking like it wants. I don't know, man, because this day today, if you look at the 30-minute, we had this nice break above the previous high, right? We had this M pattern with this divergence here. And so now we're coming back up to retest this neckline and VWAP. I'd love to try to get a short for another continuation down, but we'll see what happens here. It's going to be interesting to see.
Well, Born Alarm, our head and shoulders guy, said there's a head and shoulders pattern working on the 5-minute here on the dollar. So I'm just letting you know. Let's see if we see some kind of 5-minute pattern, head and shoulders pattern. Yeah, I guess I could see it, but they really didn't come up and
yeah,
kind of got the shoulder right there, right?
Yeah.
So if this is gonna drop off, then you could definitely get a run up in equity. So good call out there.
Yeah. So let's see if we can get that.
All right, I'm gonna go buy some calls. All right, guys, we'll see you tomorrow, man.
Yeah. See you guys. Have a good rest of your day. Thanks for tuning in.
Safe trading.